It doesn't look too great, does it? First of all, I am very pleased to be here. I'm immensely impressed that so many of you have come out to be depressed for an hour and a quarter. I presume this is because being home will be even worse. I don't know, perhaps looking at the stock prices or something. So I am very impressed. It wouldn't happen in London, I think. We are dizzy gadabouts by comparison. Well, where are we? I think it is a very interesting question to which we will never know the answer, whether we needed to be where we are. And of course, as you rightly said, up to August 2007, the general view was that, the view in the US anyway, was that this is quite a trivial problem. Ben Bernanke, who really should have been informed as well as anybody, I think, if I remember correctly, it's from memory, said in a speech, I think, not in testimony, it might have been testimony, in July 2007, that the total losses on subprime mortgages shouldn't be more than $150 billion. And since this was presumably the best informed institution on this in the world, we can safely say they didn't have a clue. Everything changed after Lehman's failure. And that created clearly a completely unique phenomenon, as far as I can see, a global collapse in the integration of the financial system. And institutions ceased to be willing to deal with one another at all. It created a total breakdown in trust, a panic throughout the financial system. And there's no doubt at all that the direct effect of that was a sort of heart attack in the financial system, was to cause a breakdown in the world economy and an extraordinarily synchronized global recession, which we're in now, which I think without any doubt will turn out to be the most serious since the Second World War. I think we've collapsed this now because of the financial mishandling, the immense mistakes made, and a process that might have taken many years is now occurring in probably a couple of years. That, I think, is where we are. But I'm not at all convinced that, as it were, if it hadn't been for Lehman, everything would be fine. I think that's very, very implausible. I think we've just accelerated massively the adjustment process that was already probably underway. Well, I think in terms of the scale of the losses that will finally occur from peak to trough in notional wealth relative to GDP, this is going to be pretty big in the US and other major Western nations. I haven't looked fully at the whole range of assets affected by the Great Depression, just looking at the asset side. But from peak to trough, I mean, it's important to remember that my peak is 2000, by the way. I think we're in a long decline ever since 2000. I've written this many times, we're in a long bear market, held up by massive monetary infusions and various other things. The peak valuations in 2000 in the Western stock market, of which the US was the most important, were by almost any measures the highest ever, significantly higher than 29. And if we go down, continue a little bit further, we are going to have losses in stock market wealth which fully compare with the post-29. The damage to the core financial system is in many ways greater, as I read it. The losses that Japan suffered in terms of wealth relative to GDP, which were, basically the reduction in the value of Japanese net worth seems to be notional, 3 times GDP. It's very unlikely that you're going to get there, because at the beginning of all this, the value of equities and homes together wasn't much more than that, so it ends up at 0, which seems rather implausible. So in terms of the losses, Japan suffered dramatically, but they had 2 great advantages over the US. First, all their creditors were domestic, and the Japanese bond creditor of the Japanese government seems to be infinitely trusting, and having a very, very wealthy, very trusting set of creditors is a very attractive situation. I'm not at all convinced that the Americans themselves fall into that category, and I'm reasonably sure the rest of the world doesn't.